Hello everyone, my name is Stephen Fox. Welcome to my channel. Today I'm going to talk about the general world situation as it is affecting stocks, and I'm going to talk about my favorite stock of all time, Nvidia, and I'm going to talk about a stock that's better than NVDA. Hard to believe, but there is a stock that is better than NVDA, which is the symbol for Nvidia. And then I'm going to talk more about how the world situation is affecting specific companies such as Tesla. I believe that the only thing powerful enough to go forward, no matter what the world situation is artificial intelligence. I think Nvidia is the heart and soul. It is the engine of artificial intelligence, and that's why I want to be in it. And I have over $600,000 in it. The last time I had this kind of money in the stock, that stock's name was Tesla. I believe Nvidia more or less is the Tesla of semiconductors and of artificial intelligence. We are now at 547. A little more than a week ago, we were talking about it getting over 500. When it was under 500, it seems like a year ago. All the things that have happened, the progress in artificial intelligence, and how that's going to propel things forward and make Nvidia barrel past Microsoft and Apple. Incidentally, Microsoft overtook Apple in terms of market capitalization. It is now the most valuable stock in the stock market. But I think Nvidia is going to surpass both of those. I think it's a long-term trend that's going to continue for decades. And as we look at the chart, this is the week where the issue of 500 was settled once and for all. It went up from 500 to almost 550, 547. It's at the top of the Bollinger Bands, and you'll see these guys on YouTube say, oh, it's at the top of the Bollinger Bands. That means it's going to go down. Well, the exception to that rule is when you have a major breakout. And I think going up from 500 to almost 550 is a major breakout, and you had better be at the top of your Bollinger Bands, or I'm not going to believe it's a breakout. Its relative strength is 73, which is good. This is an excellent stock. I think we've just begun. And this is the 1 week chart of my artificial intelligence investments. A super microcomputer at the top in red made about 6%. Nvidia in green made around 5%. And AMD in purple at the bottom made close to 0. So I'm disappointed by AMD's performance. And also, of these three stocks, unbelievable as it seems, AMD is the most overvalued stock. Its value is a little more than half of its current price, whereas Nvidia is about 20% below its value. That is very conservative to say. It's more like 30 or 40% below its value. And super microcomputer is about 30% below its value, its price. This is an easy decision. This makes sense. I was thinking, well, I'll go with the number one and number two. Well, I think I'm going with the number one. Going back to Tesla, when I was buying Tesla stock, I wasn't considering other electric vehicle stocks. And if I was going to consider another artificial intelligence stock, I would buy Broadcom. It's just a generally good stock that connects everything to everything. In fact, they call it the poor man's Nvidia, which I don't know why they call it that. Broadcom cost over $1,000 a share. How is that a poor man's Nvidia? So I was able to find one stock that I thought was better than Nvidia, and it is NVDU, which is a leveraged Nvidia stock. Direxion.com, Direxion.com, leverages Nvidia, and they made an ETF that consists only of Nvidia, but it's a leveraged Nvidia, about 1.5 times to the bullish side. So for every dollar that Nvidia goes up, NVDU goes up $1.50. When Nvidia goes up 10%, this will go up 15%. I'm going to keep most of the money in just the plain one stock, Nvidia, just because of the downturns that are possible. I'm going to start day trading, and it won't be day trading so much as swing trading. I want to be an NVDU when Nvidia is especially hot. Now, like last week, had I thought this through back then, I would have bought it on Wednesday and Thursday to try to ride the spike up. But that would be my use of it, is to try to use it at those times when it seems like Nvidia is taking off and it's going to spike. I've been trading TQQQ, which is a triple leveraged fund on the QQQ, which is the 100 largest stocks on the NASDAQ. I've been day trading that, and that's been successful, but I think I might become an all Nvidia person and just do the plain stock, $600,000 worth, and then day trade the NVDU. And looking at the chart, you can see that Nvidia made about 4.7% for the week, while NVDU, the 1.5 bullish leverage fund, made about 6.9%, which it just gives Nvidia that extra little boost that you like to see. I did this all with the intention that I made about $500,000 on Tesla when it was going up. And looking back, I should have invested more. And I'm not making that mistake this time, and that's why I've got 600,000 in. I think with Nvidia, I'm doing it the right way. I've got 1,100 shares. I've got enough size to project it into the millions, and that's what I'm trying to do. So we shall see. I'm not holding these under any circumstances. I'm putting a stop loss order in behind them. I will not take a major loss on stocks. That's for other people to do. I'm going to have a good stop loss, and I think you want to do that with your stocks, and you can save yourself a lot of heartache doing that, because these world events can come out of nowhere and just depress the stock market all at once, and it only happens once in a while, but you only have to have it happen to you once for it to make a memorable effect on you. And what is happening with inflation? Well, we have to talk about the CPI, the Consumer Price Index, and the PPI, Producer Price Index. The CPI was up, the PPI was down. What does that mean? Consumer prices rose 0.3% in December, higher than expected, pushing the annual rate to 3.4%. The 3.4% was higher than the 3.2% that was expected, and the 0.3% increase for the month was higher than the 0.2% increase that was expected. They exclude volatile food and energy prices, the so-called core CPI, that just excludes all the things you need to live. But that rose 0.3% for the month. Now that's really bad, because that's the sticky part of inflation. And 3.9% from a year ago. Oh, it's edging up to that 4%. We don't like that. This is compared with estimates of 0.3% and 3.8%. Much of the increase came from rising shelter costs. The category rose 0.5% for the month. It accounted for more than half the core CPI increase. Shelter expense, home expense, that's what's driving it up. Wages adjusted for inflation posted a 0.2% gain on the month and rose a modest 0.8% from a year ago. So wages really aren't keeping up with inflation, and wages really aren't contributing to inflation. It's the shelter costs that are driving things up. And we got just the opposite sign from the Producer Price Index. Now, the Producer Price Index tends to predict future inflation. This is what producers pay, and then they pass the cost on to us. But they actually went down 0.1% in December, which is very positive for inflation. It's a gauge of wholesale prices. It fell 0.1% for the month, and it ended 2023 up only 1% from a year ago. And excluding food and energy, the core PPI was flat against the estimate for a 0.2% increase. Excluding food, energy, and trade services, everything you need to live, PPI was up 0.2% in line with the estimate. So the core PPI and the headline PPI were only up 0.2%. So what does this mean? The CPI went up. The prices you pay at the register, that went up. The producers pay for their goods to be able to produce the goods, that went down. So they're making more money and they're charging you more. They're paying less for what they need, while they're charging you more for what you need. It's eventually going to come around. It's eventually going to get passed on. And they might be making up for not raising prices fast enough when inflation started to take off. So there is kind of a little bit of a delay, let's say. But eventually it will show up in the CPI. But this is very good because it indicates that the CPI is unlikely to take off, that inflation probably is on course to have a soft landing. Geopolitical risk added into concerns about the stock market, and mainly the price of oil. Although the price of oil has stayed in the low 70s, I don't think it's had that much of an effect, surprisingly. The Houthi rebels in Yemen are attacking ships entering the Red Sea, particularly oil tankers headed for Israel. They are trying to affect Israel by decreasing their shipments coming into the country. They control this little parcel of land in Yemen where they launch attacks against oil tankers and ships, especially that are Israeli flagged. And they've been doing this off and on. The United States has warned them over and over again that we're going to blast you off the map if you keep doing this. And they apparently didn't believe what they were being told. And so last week, England and the United States decided to blast the Houthis off the map, which they did and which they will continue to do. And it just depends on how many blasts they want to take before they quit doing what they have no right to be doing, which is affecting world trade. 15% of the trade in the world goes through the Red Sea. And what the Houthis have been doing has been affecting more than oil. It hasn't affected oil all that much. But what it's really affected is container prices, which have gone up significantly, and that will add to inflation. In particular, Tesla is going to shut down their Berlin Gigafactory for 2 weeks because they can't get the parts they need to make their cars. And so they're shutting down for 2 weeks. So Tesla's really having a hard go of it lately. I think Tesla won't be Tesla again until they start making robots and the robots start taking off and start getting used worldwide on a daily basis, both commercially and otherwise. Tesla has also been affected by the auto strike indirectly because the workers at Tesla want raises commensurate with the raises that the auto workers at the other car companies are receiving. Please give me a like if you think that I'm onto something, thinking that Nvidia is the Tesla of semiconductors and artificial intelligence. After all, it is the engine of artificial intelligence. I'm consolidating and concentrating to increase wealth. It's not diversification for safety, but I think there's safety in the fact that it's such a solid stock. Is Nvidia going to go broke? Highly unlikely. Be sure to come back, see how this all pans out. Good luck to us all.